Good day, all. Ira Epstein with your metals market wrap-up for a very quiet Columbus Day, October 14th, 2019 at 3:50 p.m. Central Daylight Time. Well, more sanctions are being discussed around the world on Turkey. The U.S. leveled some sanctions today. I did a piece on this on Bloomberg this morning on TikTok before the sanctions came out. And what I said then, I'll say now. If the U.S. really wants to destroy Turkey, you don't do it by putting sanctions on some of the government officials responsible for this, raising the steel sanctions that were once 50% back in May, back to 50%, and you don't say you're going to stop a trade deal on $100 billion worth of trade that hasn't occurred anyways. It was just in the works. Stop the banking. That'll do your job. Do what you did to Iran. Don't let them have access to the U.S. banking system. Watch what happens. That's a whole different level, but we didn't do that. Now, the metals are up today. We're seeing the dollar up a little bit. The market had a bid in the bonds and the notes. Remember, the cash markets were closed, and energy's down. The other thing that came up was the yen. Not dramatic, but this is partial reaction to the idea over the weekend that the Chinese media do not say that the U.S. and China have a deal. They say that they have a pause in the tariff war right now, and apparently the vice premier of China is going to come back to the United States to work on and off on the wording going into, if they can get it done, an agreement on phase one. As we look at the weekly area chart of closes, the bias is up. The market is still over the 18-day average of closes. However, you can see how the market's been in a correction mode since it closed at 1526.60. That hasn't changed just yet. When I look at this chart pattern, you can see how the market's come down in a stepping manner, and the market has not gotten through these recent lows. Now, it did it back here. It took out these lows when it got here. Now the question is this a pause zone, or is the market going to take out this low and come back into this area? When I go to the swing lines, you can see lower highs, lower lows. Now, one of the things, if you don't understand what I'm showing here in swing lines and the other charts, I'm going to talk about my charting course right at the end of this video. In it, it teaches you swing lines, Bollinger Bands, window envelopes for those of you that use it, what I call the unique properties of slow stochastics, but we'll get into all that. Right now, you've got lower highs, lower lows. That is the definition of a downtrend by many chartists. I created this indicator so that you can easily see it. It has 5 rules that are discussed in the charting course. The neutral zone on many charts is what I call the line in the sand, the 18-day average of closes that is right here at 1507.30. You didn't hit it today. You had your most recent breakdown. We're getting a bounce. That breakdown carried on Friday to the lower Bollinger Band, which are these black lines right here, this black dashed line, and this one. Number one, they're not parallel to each other. Number two, they're not parallel to the 18-day average. The formula is an algorithm designed to keep the market trading within the bands 95% of the time. Now, the longer a market goes sideways in the bands, the more powerful it'll break out of them eventually. We're not there yet, but each time we've recently hit the lower Bollinger Band, within a short period of time, the market has gotten back to the 18-day average of closes, where I still think the pros have control of the market. Why? The swing line is down because you're under the 18-day average. I define bias as being down. If you were over the 18, the bias is up. Markets often go to that line in the sand to figure out what to do next, and momentum is not doing much. It came down, and it's sort of going sideways right now. So, in summation, trend down, bias down, momentum flat, resistance, 18-day average of closes. If the market were to take out last week's high of 1522.30, you would break the downtrend pattern of lower highs, lower lows, but not set up an uptrend. The same exists in the popular ETF GLD. You've got lower highs, lower lows. Now you made a run to the lower Bollinger Band. You didn't quite hit it on Friday. 138.91 is that low. The Bollinger Band was 138.84. It's pretty darn close. You didn't hit it here either, and then you got back on these times to that 18-day average. I have no reason to suspect this is any different, with the exception of you still have momentum pointing down here. That's different than the futures. So I have the trend down as defined by the swing line, the bias down, target 138.84 if it wants to get there, with resistance 140.150. This trend is broken if the market gets over 142.58, but it doesn't start an uptrend. In the gold miners, you have a higher high, lower low pattern. That is not a trend. I don't see a trend there. I see two levels of support, the 100-day average at 26.68 and the lower Bollinger Band right here at 26.36, resistance being 27.87. Let's assume the market drops. I'm looking for that support zone. It is oversold, so I would expect the pros to be aggressive there on covering some of the shorts. Now, what if the market rallies through 28.38? Okay, but you still have a lower low, higher high at that pattern, not a breakout. The gold-silver ratio has done what we talked about last week. I was looking for it to get back to this 18-day average of closes. If it settled like here, it would be under it, giving the market downside bias, which is friendly silver versus gold. I haven't seen the settlement prices yet. In the silver market, we do have a pattern of higher lows and a higher high. The market is counterbalanced because prices closed underneath the 18-day average of closes, which puts the bias down. Any settlement over 1777 gives this market a kickback to what? Having the swing line bullish, having then bias up, and maybe momentum will turn up. Don't know yet. It's just flat right now. So resistance right here. What would I call this market at this point? Very neutral. Let's assume you take out 1737 and don't take out the 1800 level. That could give you lower highs, lower lows, and put back into play the 1700 zone. In the copper market, you've got higher lows, higher highs. You rallied on Friday right up to what I call that, the upper Bollinger Band, and the combination. You tried to get to that 100-day average. Didn't quite make that, but you got up to that combination, and you're pulling back right now. Support likely at the 18-day average of closes. Overbought in an uptrend that has hit an upside target. In the platinum market, we have higher lows, higher highs, oversold market, and bias down. Nothing working there that I can see to do. In the palladium market, you got back to the upper Bollinger Band today. The first challenge of it is often where pros take the money off the table. What's the strongest metal you see? Palladium. It's been that way for a long time. It loses a little bit of that as we get into these corrections that inevitably set in, but it's taken leadership over in this market. And in the dollar index, we are still very much in a downtrend. Lower highs, lower lows. Problem is you're now oversold. You missed a thrust down to the lower band. It can still get there at 97.80, but if it rallies, I'd look for resistance at 98.48.5, and this all changes if you get back over 98.95.5. So you put it together, you got an interesting day, and as I said, in my charting course, what I try to do is everything you've just seen and much more comes together as I've put together 6 hours of videos. You see the video, you do what I do, and you do it, and you see what I do, and you do it yourself in the charting software we give you, which includes all the data that you need. Now, the charting software by itself is about $100 value, and it carries all these studies, and I teach you how to use them. Now, the videos are nice, but remember, if they're videos, I recorded them in the past. To go along with this, I give you a full subscription to my research, my morning subscriber video, my daily, twice daily commentaries. If you like our Linn research, it's included in there, all during the time that the course is active for you. The course itself, complete, in my opinion. You're going to learn all that you see here, plus window envelopes and more. The course runs $179.95. That includes our mobile application, which is a $40 a month value, works on iPhones or Androids. Our charting software, a $100 value. A month of a full subscription to my research, a $60 value. The whole course, $179.95. So if you're interested, go to our website under the word education. It tells you all about it, and away you go from that point. Just sign up right there. You can click here to get there as well. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.